Hi, Tom Maher here from PATRIZIA. I'm a managing director in our infrastructure team focused on European mid-market infrastructure equity investments. We like mid-market because of the capacity to enter at very attractive multiples, to drive value through active asset management, and ultimately contribute to creating the infrastructure that leads to a better tomorrow. We define the mid-market as those businesses with an enterprise value of less than $1 billion, whether it's US dollars, euros, we're reasonably relaxed. So these are small and mid-sized businesses that are generally very dynamic, often entrepreneur-led, managed by the founders, and creating the infrastructure of tomorrow. Importantly, we look for businesses that are very consistent with the key macro themes that we see driving infrastructure investment. So decarbonization, digitalization, demographic change, climate change. So those are the big four themes driving infrastructure investment. And interestingly and excitingly, it is mid-market infrastructure businesses that are creating investment opportunities and infrastructure solutions in response to those themes. So if you think about decarbonization, if you think about energy independence, it's actually smaller businesses that are creating the infrastructure. If you think about that transition from a large monolithic power plant to now you've got some renewable generation, some batteries, some rooftop solar, some agri-solar, some district heating, some energy from waste. That large single asset has been replaced by a much larger number of mid-market businesses, very dynamic, very responsive, and critical to our future. We at PATRIZIA really focus on mid-market, not only because of how dynamic these businesses are, but also because of their capacity to deliver better risk-adjusted returns and better portfolio outcomes. On the return front, frequent data since 1996 shows that the median mid-market fund has outperformed by 150 to 250 basis points relative to large cap. Mid-market managers are able to outperform because of the capacity to A, buy cheaper, so multiples are lower in the mid-market space. Two, add more value. So taking a business and optimizing it, driving those asset management outcomes in the mid-market, there's a lot more upside. There's a lot more potential there to really drive these businesses and create value. Ultimately, and we don't bank this, but the aim is always to jump that mid-market divide. So to be able to take a mid-market business through organic growth, through inorganic growth, and take it into the large cap and exit at the premium that we see for large cap businesses. The other benefit that I mentioned about investing in the mid-market is enhanced portfolio diversification. So we see that mid-cap managers are able to access parts of the market that a large cap just cannot invest in. And as a result, we're able to access very attractive risk-return profile investments and investments that are naturally diversified relative to a large cap manager. And so if you're an investor building a portfolio, mid-market brings a lot of additional value from a portfolio diversification risk return perspective.